So welcome, guys.
Yeah.
Um, okay, somebody you want to say something, Peter? Hello, okay. Yeah. Okay, good. So welcome back, to our weekday markets, where we look at, how we do it, not just the technical aspect of trading, but we look at, first of all, we look at macro, we look at the sentiments, before we come technically. And then we also discuss geopolitics because it's been shaping, it's been shaping, what, the financial market has been doing. Um, all this while it's been shaping a whole lot when it has to do with the markets. Okay, so excuse me, guys. So it's been shaping a whole lot when it has to do with the markets. The war in the Middle East between Iran, US, and Israel, especially it has been affecting the energy markets, and not just affecting the energy markets, also been impacting positively on countries, who are, net exporters or producers of, rather producers of crude oil. Canadian dollar number one. Even the United States itself, that is a very big producer of crude oil. That's one of the reasons it has been getting. Aside from, its safe haven appeal during the times of uncertainty, that has been sapping the whole, safe haven flow that is meant to be moving in gold. Because some people may be asking, okay, why is it that, when, uh, for example, now there's time of uncertainty and gold is not pushing up, gold is rather pushing down and consolidating. That is the case. Dollar is, sapping all of that safe haven appeal, not just because of the safe haven currency, but even when crude oil prices are high, dollar is also expected to gain because what US is a major, crude oil producer. All right. So what do we start with? We first of all start with look at the economic calendar, then we'll look at macro data, and then we'll discuss geopolitics. What are those stories? Like I said, this period is a period whereby what's moving the financial, excuse me, sorry, what's moving the financial market currently? It's not monetary policy expectation, but what is moving the financial market currently is geopolitics. Okay, that's the major thing that is moving the financial market right now, and that is the case of what is expected to happen and how that could shape, financial assets moving into the new week. Okay. So we first of all, look at the economic calendar. So do we have any, high impact event that's going to come to affect, especially the eight major currencies we usually look at? Um, Starting from the 16th of March, which is Monday. So we're going to be having a core CPI, which is the main measure of inflation for Canada. So that's, in terms of monetary policy expectation, CPI is expected to affect the Canadian dollar, in which, based on the leading economic assessments, I can see CAD is, been weak, for some time now, but just because of that safe haven, or not really safe haven appeal flows, because of Canada, a major big crude oil exporter and producer, it's been making the Canadian dollar to gain a whole lot. So let's see uh what happens with that. But because of leading data, it's already showing me signs of weakness. Let's see what's definitely going to happen for the card. All right, because from what we can see here, expectations are, there could be some sort of maybe reduction in card, depending on what you are looking at, either year on year or month to month. So let's see. What we look at in terms of this data is when data comes out and beat expectation, not coming in line with what expectation is. So we look at the surprise that is beating expectation. So that is for card CPI, CPI measure of inflation. And so we have the Reserve Bank of Australia, interest rate decision, which we expect, them to be hawkish, even if they keep rates unchanged. But we expect their forward guidance to sound hawkish. Okay, that is raising interest rates. And when the country raises interest rates or expected to raise interest, remember we don't look at we are not waiting for central bank to actually raise interest rate before we can act. We look at their expectations, based on data. We assess data as professional traders, economists or analysts. These are the things we look at, to trade on time, because the market moves based on expectation. The market don't move, based on, okay, interest rate is now on. No. If you hear that maybe you want to buy a smartphone, and the smartphone, let's say, is worth, let's say, 200,000 naira, and because of certain things, maybe in terms of supply disruption, that price of that smartphone could get to 300,000. Are you going to wait for it to get to 300,000? Let's say you buy and resell for you to, buy that smartphone. No, we are not going to buy now in anticipation of prices going to hike. And that's exactly what we do in the financial markets. Okay. So on the 17th of March, which is Tuesday, around 3 a.m., when most of us are going to be sleeping, Sydney time, the RBA, the Reserve Bank of Australia, that the central bank in Australia, is going to be increasing, it's going to be having the interest rate decision, but most likely going to be increasing the interest rates. Okay. So we also have PPI data from Switzerland, an important one, Producer Price Index, a measure of inflation, which is an early sign of inflation. When you look at, the chain of production, I've explained this, previously. Before inflation gets to, the CPI, which is consumer price inflation, inflation has to first of all come, to the producer, and even before producer, you look at things like commodity prices. That is where you see the early signs and early warnings of what? Inflation. So PPI data is an important one for Switzerland on this day. So as we head on to other weeks, other days. So CPI data also coming from CPI data, sorry, excuse. So CPI data from the Eurozone, okay, it's also expected to be out that same Tuesday by 11 o'clock in the morning. So these affects the euro, okay, and from what we can see, previous is inflation in the euro area is 2%, and we also expect the market is expecting it to be at that point. So what we are relatively looking at is a kind of a surprise. And even if we don't see that uptick now, we are going to see it maybe in the next inflation data because of crude oil prices, the war in the Middle East. Because when we have the war in the Middle East, Europe is one of those areas that is mostly affected because it's heavily dependent on gas, all right, and crude oil in terms of air travel, the gas they use in cooking, even petrol driving, the electricity is going to increase. If you have siblings or relatives who are in Europe, you ask them now, they will tell you that the cost of gas and energy products are increasing. That is because of the war. And when this happens, we expect euro, to weaken. Now, if inflation is coming up and maybe the war, we are no longer, maybe we begin to see the escalation in the war, euro will begin to be strong. But for now, euro is weak. And this is the reason, because of this higher gas price. So it's going to affect euro a lot. Europe is going to be spending a whole lot of money, all right, in terms of opening their reserve, spending a whole lot of money because gas prices become expensive. Iran is blocking the Strait of Hormuz, and that is affecting supply, all right? So if, let's say, Europe is going to be buying from, other places, it's going to be at because crude oil price. And that is why you could see during the week I've been selling Euro USD, and that is simply the reason. My first level entry was here, and the last one, I think on Thursday, before the end of the week was at this point, at this level. Yeah. So understanding of the forces that control the financial market is really important. Not just data alone, but sometimes geopolitics overrides macro data. And that is why you need to read a lot, learn a lot when it has to do with the financial market. Listen to a whole lot of news. Some of us, we don't like news. We like to watch I'm not trying to say I don't watch football or maybe some other things that can make you happy. But if you are a financial trader or want to be a financial trader, financial programs should be your best. You need to begin to like or love watching these programs. If you know anybody who is around me, anytime I open my tablets or my laptop, on the television to watch anything, it's usually this period is Bloomberg or about the war. When you see me reading either with my smartphone or my PC reading the news, I'm on Twitter. I'm looking at news feeds about the financial markets or probably in this period about the war to get early information of things that could affect the financial markets. So it's really important. All right. When you are in love with that, you see, I know maybe when you're starting, it's going to be difficult. Maybe you're not going to be, understanding it and it's going to be boring. But you need to persist. And anything you don't understand, you can easily use AI, ChatGPT to ask. All right. And then maybe when we come to webinars like this, you can bring those questions and I'm going to explain what those things means and maybe what those terms means. Okay. So that is it. So moving on, that same day we still have the PPI data, the producer price index for the United States, okay, which is a very important data. And by 2:45, that's 14:45 Nigerian time, we have the Bank of Canada interest rate decision. All right. So the same day by 7 o'clock Nigerian time, we're also going to be having the Federal Reserve interest rate decision. That is the central bank of the United States of America. And by 7:30, we are going to be having the FOMC press conference, which is important for you to watch. And this one is going to be important, not just because it's America, but, the American financial market tells you a whole lot about the global economy. And with this war going on in the Middle East, it's very good for you to listen to the forward guidance that's going to be given by Jerome Powell, who is the chairman of the Federal Reserve. Okay, so it's really important for you to pay attention to that. The man who gives us the most expensive good morning, good afternoon. Good afternoon, ladies and gentlemen. Yeah, Jerome Powell, if you know him very well. He has the most expensive good afternoon. His good afternoon moves the market a lot. So, meaning we have a whole lot of, interest rate decision this week. It's going to be a whole lot of a busy week. So, you need to be smart when it comes to trading this week. Because with this, high impact, economic data events with geopolitical tensions now, because the war is moving into another phase. I was reading early this morning, seeing that some Iranians are giving a kind of intel, to Israel Defense Forces, on the locations of the Basij and IRGC forces who have been cracking down, anti-Iranian regime protests just to pave way for Iranians to, kind of overthrow their government. And that is the next phase the market is moving now. And possibly the Pentagon and CENTACOM is kind of assessing the risk of maybe sending in special forces to go and seize the enriched uranium of Iran. Probably what they want, that's what they want to use to build a nuclear weapon. Remember, that is the major objective of America. Iran shouldn't have a nuclear weapon. And the third one, especially when it has to do with energy markets, and which also affects currencies linked to crude oil, very important, is also yesterday's attack on Kag Island. The other time I was explaining the Strait of Hormuz. Now, Kag Island is just a region inside Iran, an island inside Iran, though that controls 90% of Iranian energy exports. Okay, and the report yesterday is saying that the U.S. military took out military assets around that island from military helicopters, air defenses, missile launchers, and even military intelligence center. Anything that is a military asset in that island, Israel, America took it out, but they didn't strike the oil facilities, right? So, and I don't think Trump will want to strike the oil facility because he's working hard to calm the energy market for crude oil prices to come down. The G7 and other countries are releasing, about 3 to 400 million barrels of oil from their reserve. I don't think Trump is going to be striking that, even if Iran probably continues to attack ships and vessels and block the Strait of Hormuz. I don't think Trump will have anything to gain by attacking, Iranian energy facilities. I don't think he will do that because it will have, regardless, it will harm Iran economically, but the objectives could change, but it's going to cause crude oil prices to push the upside. And in retaliation, we know what Iran is going to do, which they are doing already. They're going to be attacking, oil facilities in the Gulf region, oil facilities in Saudi Arabia, in UAE, in Oman, in Kuwait, in Bahrain. UAE has been, the most attacked Gulf nation since the start of the war, since February 28th. So that is it. BOJ interest rate decision, that's the Bank of Japan. So we also have SMB interest rate decision, that is the Swiss National Bank. So a whole lot of interest rate decision coming in this week, which, like I said, what we're having, you have to be very careful. So, that's Thursday, the 19th of March. So after the SMB interest rate decision, we're also going to be having the Bank of England interest rate decision by 1 o'clock. Another important one, that is for those who trade the Great British Pound, an important data, okay? And one thing I could also tell you is you need to understand in terms of what is going to happen next with the GBP. When you look at the splits, how they voted, check how they voted last time, and how many members are voting for a cut, a hike, and those who want to remain, the interest rate to remain unchanged. You look at it and then look at the forward guidance that is going to be coming, and then from Andrew Bailey, there you assess, maybe future rate expectation from the Bank of England. Okay. So by 2:15, we're going to be having interest rate decision from the European Central Bank. This week is going to be a whole lot of a busy week. As a trader who is not aware of, or not understand fundamentals and macro, I don't know how they are going to cope this week. It's really important. You need to be very careful. That's why you could see, that's why I first of all start with economic calendar. So we are aware of things that are, because almost every pair, major pair you trade now has interest rate decision this week. I think excluding Reserve Bank of New Zealand that doesn't have interest rate decision, this week, because I've not seen that. Okay. So it's very, very key and important that you are aware of this so that when certain moves happen in the market, you will not be like, what happened? What happened? Okay. So on Friday, not much of a data, but we have a retail sales data from Canada, which is a coincident data. It doesn't have much proof to cause in the market, but some market participants are going to pay attention to it. Okay, so that is for the economic calendar. I don't know. Does anybody have any question to ask me about the economic calendar before we move on to the next phase, looking on our macro analysis? Any question?
Yes,
Okay, go on, please.
yes, sir. During as we were trying to explain the economic calendar just now, the low impact news, you pay attention to them. But to my understanding before, I thought maybe those low impact news do not really matter outside the high impact news and medium impact news. But your explanation now, you are paying attention to the low impact news. So how does that really affect the market, sir?
Okay. I'm not really paying attention to low impact news. When you say low impact news, can you give me an example here of what will, can you give me an example? Like low impact news we came across that I mentioned. Hello,
Okay.
Simon. Yeah, go on.
Yes, like the Bank of Canada just now, I think it was showing on when you first check it was the CPI or the PPI, whatever. It was showing on like low impact, which is on white square.
Okay. PPI data. Okay, now let me explain. Now, retail traders, when they think what matters when they look at the economic calendar is when they see is a red folder, is a yellow folder, and is a white folder. Now, 60% of FX moves is based on interest rate expectations, which causes flows in bonds and affects currencies. Now, the question you ask yourself is this: what is a central bank who is giving these decisions or their expectations move the market? What are they looking at? What are they focused on? That brings you to their mandate, which I have explained before in one of our webinars, which is price stability. When we say price stability, we are talking of inflation. And what do we use to measure inflation? CPI. Okay. But now when we talk of PPI, PPI is an early indication of inflation. For example, if let's say this pen, for example, okay, before I buy this pen, and let's say it's expensive, if I want to know the cost of this pen, I may first of all, before I buy this pen, earlier on, go and ask the producer, please, what is the cost of producing this pen? Before maybe I will tell my friends, okay, please, sorry. So that's what I'm going to be doing. Okay. So it's not just an issue of is a high impact data or a low impact data. It's all about what is the importance to the financial markets. Is this something that is going to cause a change in interest rate expectation for that particular currency? So inflation, which CPI is a measure of it, and then the labor market. This is what, or employment. This is what the central bank is focusing on. How do they? Number one of their mandate is inflation. Stable prices. They don't want prices to move above the roof. Let it be on a stable level. And also them affecting employment indirectly, not directly. How do they do that? With interest rates. All right. And in terms of their effect on credits, or maybe private sector credits, small and medium enterprises, SMEs, how accessible loan is for the economy. Because if companies have access to loans, they are most likely going to expand. And one of the things they will do to expand is they will create more jobs. They employ people because their business is growing. If your business is growing and you want to, let's say, open another branch of your business, you're going to need more workers, more staffs. All right. But if your business is not growing, you are going to sack people. All right. So one of the things central banks do is make loans cheap and available for businesses. One of the reasons why, let's say in Nigeria, businesses are complaining is because, people can't, even the money people have cannot be able for them to do business. And they cannot access loans because loans are expensive. The cost of borrowing is expensive. That's why you see businesses are finding it difficult here in Nigeria. So what am I trying to say here? What you should be looking at, what is going to affect interest rate expectation, because that is what is going to make currency moves to either go up or go down. Because if, let's say, inflation data and employment data are going to cause central bank to raise interest rates, investors are going to begin to buy that currencies now, because what investors want is their interest. In basic economics, they said interest is the number one driver of investment around the world. But if the factors coming from inflation data and unemployment data is showing that central banks are expected to cut it, investors will pull their money out of that what economy, because investors are simply looking for interest. They are not, they are looking for interest, and then they look at maybe, okay, is this economy good or bad? But they are looking for interest. That is what investors care about in the financial market. Then during time of uncertainty, they prefer safety more than before they look at the yield. Okay. I don't know if I answered your question, Simon. Hello,
Yes.
Simon.
So, yes,
Okay.
I say partial, like I say partial because I don't what is the what my what I don't really understand. As you mentioned, as investors are looking for the interest. So now, how do you now, as an investor now, how do I now know that the currency that I want to invest on will not give me interest?
Okay. Now we are not. Okay, continue. You want to say something?
Yeah, I wanted to,
No,
no,
Okay.
I'm talking to the what's his name? But carry on. I had an outburst because you say he's an investor.
Okay. So now that action is left for the interbank transactions. All right. Uh, Banks who do business, investment bank who do business with the central bank, we call them primary dealers. These are transactions that moves interbank. All right. Now, when you look at the hierarchy of how the financial market works, number one, you have the central banks, then you have the investment banks, hedge funds, you go down, hedge fund, pension fund, you go to prop deskies, brokers, and then before you come to retail traders. Now, me and you don't have the large sum amount of money to go walk into an investment bank and go and do a transaction. We don't have that. Okay. So, and that's why we use brokers. Brokers are making it available, like Godo, making it available for us to be able to participate in the financial markets. So, all we need to do is we need to look at what are the big guys doing. What will happen for them to buy a particular currency? What will happen for them to sell a particular currency? So, that is all we're doing. So, when those informations that they look at and they see the central bank are going to hike interest rates, and they begin to buy that currency because of the interest they are going to gain. All right. This is what's going to also make us in the FX market to buy that currency. So we are not really making money based on because the central bank is hiking interest rate. We are going to be paid interest on that. No. We have, the bank is the one that are doing that particular kind of transaction. But because there is big demand from the investment bank for that currency, which is going to strengthen that currency in the FX market. That's what's going to make a particular currency to go up. So we begin to buy in the FX market, expect with those things in expectation, and probably let's say that particular currency goes up. So we make money just by those little move in the exchange rate, not really because of interest. That's sort of interest that is left for the big banks, which majorly they do this in terms of the bonds, the bond markets, all right, which reflects with the currencies. So this is a whole phenomenon that we need to have a session with, not some, because we begin to explain that this webinar is going to be very long. All right. So let's not try to deviate from the topic of our webinar, focusing on just macro move, but I can always try to touch one or two things in it. We're not trying to make in terms of that's left for the banks. All we are trying to do is the exchange rates, the change in the exchange rate. But we are assessing what banks are doing. All right, because their objective and our objective is different. I don't know if you understand that. We are not in an investment bank or in a hedge fund. The objective is different, and ours is different. Ours as retail traders is just to make money off the exchange rate, not because of really because of interest. We are watching it to assess what the investment banks and big boys are going to be doing, because they're the ones who have the cash to move the market. So as retail traders, we make money based on the change in that exchange rate. Is that understood?
yes, thank you, sir.
Okay, good. So when we go to macro data, this like I said, market is not focusing much on macro data this week. It is, but like for the last 2 weeks, the war have started, but it's not focusing much on it. When you watch, Bloomberg, CNBC, and other news article, Yahoo Finance, watch their programs and you see what big traders from a whole lot of investment bank, hedge fund floors are coming to say. See that everybody is focusing on the energy. They want the war in Iran to become, because that is actually taking everybody's attention. That is what the market is focusing on, the war in Iran or the Middle East station. So, but how am I positioning myself for that this week? Now, from what I can see, from my currency scorecard now, USD NZD. So NZD is not an oil exporting nation or gas in the case of AUD, because Australia exports produces a lot of LNG, liquefied natural gas, which is what is strengthening their currency. Regardless, it's a very risky currency during time of uncertainty, but that is why AUD is gaining. So, and the NZD USD took some opportunities from me this week anyway. So it's actually one of the currencies you are meant to be looking at. And when we look at sentiment, what are big guys doing when it comes to NZD? You can see NZD, coming from negative 0.6 to negative 19. That's a very big push when it comes to, NZD. Where you can see, without that, you can see the big fall that NZD USD has been doing right from this level. So what do we expect from NZD USD? This move is, probably very soon going to be over. You have to be very careful, looking out for, more sales. We could see more sales to the downside, but you're going to be very careful with that. So what do I expect from NZD USD for now? Any little corrective structure, we could see price maybe push one more down, taking away these lows and probably this low. Okay, that's what I'm looking at for the NZD USD. If I get a clear corrective structure and my setup, I could be looking for more push to the downside on NZD USD. So not just in terms of because of data, but also geopolitics. When you look at the geopolitical play, you will see it's favoring dollar compared to the Kiwi. Okay. So we'll go next on we'll look at USD Swiss and USD CAD. USD Swiss, the dollar is beating its pairs, now. So when we look at USD Swiss, so for USD Swiss, anytime we get a corrective structure, price could maybe want to give us a corrective structure, something similar to this. Price giving us a push to the downside. I don't see that coming anytime, or maybe price could decide to give us a push similar to this, this move here, and then push back up. It could be sharp like this, it could be corrective. So any of them that happens, I'm going to be looking for, a move to the upside. Why did I say so? Here could be an impulse, a correction, impulse, a correction, impulse, and then we could be having a very sharp move here. I'll be looking for a push to the upside. So if you look at USD Swiss in terms of sentiment, does it favor this kind of a move? Let's see. So USD Swiss from minus 18 to minus 0. So, but this week, why is it pushing up? Simply, Swiss is a safe haven currency, but dollar is not only enjoying the safe haven appeal, but because of the yield it's getting from as an energy producer. Okay, because when crude oil prices are high, energy countries that produce and export crude oil earn more money, all right? Because they earn more when prices are high. They means they earn more. So, but Swiss is not one of those countries. Okay, that's why dollar is gaining, even though Swiss is a safe haven currency. So the next one I have on my list is USD CAD. USD CAD, I actually was talking with Dr. Luke during the week how I missed USD CAD. I was watching USD CAD early during the week, but I missed the opportunity. But what am I looking at for USD CAD coming into the new week? Now, coming into the new week, any corrective structure in USD CAD, something similar to what we have seen here, a clear three-wave structure, we could see price pushing to the upside, taking away this high and including this high here. Okay, that is for USD CAD. That's what I expect for USD CAD. To see more rally to the upside. At least that rally could come very close to 1.38300 level and even above. Okay, that's what I'm looking at for this week on USD CAD. Because dollar is not just gaining in terms of the safe haven appeal, like I said, but also in terms of the energy crisis currently. So, and if we begin to see maybe a lot of some sort of de-escalation from the war, or maybe nothing again affecting crude oil production and shipments, Canadian dollar is going to weaken more, especially with what I have also in terms of monetary policy data is one of the weakest currencies. So I think the move for me is going to be favoring more of a bullish USD against the CAD. But in terms of sentiment, it says a little bit different. Let's see from -3 to -28. Okay, let's see how that is going to unfold. I wouldn't want to go against what institutions are doing, but I think I'm on the right play. I think this move is coming in a kind of a little bit late in terms of the sentiment. So for the next one here, so that is for USD CAD. I've explained what I'm going to be looking at for coming into the new week. A small corrective structure similar to this, and then one more push to the upside. That's what I'm going to be looking at for on USD CAD. Okay. So let's look at the next ones. So for Euro, I've been hearing a lot of news, not just in terms because of what I have on data, but also in terms of news, a possible interest rate hike for the ECB. But I don't think that is going to cause strong moves for the euro, simply because of this war, because of the energy crisis. Anytime we have higher energy prices, euro is one of the weakest currencies. When you go to let's go to euro USD, look at euro USD. Let's go to the daily time frame. When you look at let's try and go to 2022. Yeah, during the start of the Russia-Ukraine war, you could see. So anytime we have a kind of energy crisis, Euro is one of those countries or economies, that is more affected, more than the UK, because of its size, is more bigger than the UK. So even though the GDP will always weaken, but Euro is going to weaken more because of the size, number of nations in the European Union. So, and that is why for now, I'm not going to be paying bigger. That's why I'm selling Euro against the USD, regardless of monetary policy expectations is telling me that probably they're going to be interest rate hike, but I don't want to pay attention to that because there is a geopolitical play that is removing the attentions of trader. But when that is done, I think Euro USD should continue its bullish trajectory to the upside. So I'm not going to be looking at anything Euro for now to the upside. It can only be a downside. Okay. So next one I have AUDNZD. So let's look at AUDNZD. So I don't want to look at Euro for now, and I've explained that. So AUDNZD is one I've been taking, very big advantage of for the past few weeks. And I think AUDSAD is at, its all-time high. For now, I will be very patient to see what this pair is going to do, this week, because price is already at its all-time high. The structure I can see here is already completed. A 5-wave structure, impulse correction, and an impulse. So there's nothing again to look. So I'm going to wait to see how market is going to react this week. Okay. So that is it, guys. So the next one I have on my watch list is excuse me. So the next one I have on my watch list, let me try removing this. So AUD against the Swiss franc. So in terms of sentiment, what do we have here? In terms of sentiment, AUD Swiss franc. So from 6 to -8. So probably I'm not going to pay much attention to AUD Swiss franc because of how AUD is in terms of the data and also getting from higher LNG prices. So AUD Swiss franc is not one I'm going to be maybe trying to focus more attention to. But let's see how it unfolds. Maybe any kind of if price maybe gives a corrective structure here, maybe on 1 hour a push up, it could give us some sort of opportunity. But what we can say in terms of sentiment is not also favoring this move in this place. So I think I rather pay attention to some of the currencies I've mentioned, which is giving me a better opportunity like USD card and the rest. So the last one I have here is AUD card. So in terms of sentiment, what do we have for AUD card? So for AUD card, it's showing a heavily negative from +20 to -36. Why this could be happening unless because the big bank and institution, there is definitely something they know we do not know. Let's keep on looking at this weekend. Are we going to see some kind of crazy, activities from because sometimes they have this kind of information about what the political class is going to be doing that we don't know till we hear them on the news. I can tell you from experience. That's why sometimes when I see this kind of move, I will be like, what could be happening? Okay, so let's see what is going to happen. So I'm going to, not focus much on this, AUD card for now. Okay. So I don't know. Do we have any question? So I think that is all for now in terms of currency moves. Do you have any question before we continue to maybe round up with geopolitics? Hello?
Yeah, hello, sir. Please, can you help me to look, analyze AUD-JPY?
AUDJPY. Okay. You mean analyzing it technically, right? Good.
Technically or fundamentally?
Yeah, good. So in both ways, when you look at AUDJPY, what we have in terms of macro data, JPY, I've not been long JPY. I bought cat JPY during the week as well. The last up move before we begin to see this down move. And why I'm not interested in strong JPYs currently is Japan is one of the major importers of crude oil as well. So this war in the Middle East is also affecting them because they are net exporters. So it means as crude oil prices are high, they are going to pay more. So meaning they're going to spend more money. Okay, so for AUD/JPY, regardless of what is going to happen in terms of the moves, I'm not interested in selling AUD/JPY. If I want to trade AUD/JPY, I'm only going to be interested in the bullish move, to wait for a complete structure here. So probably let's say a corrective structure downside, then I'll be looking for opportunity. But in terms of JPY's, strengths. No, I'm not interested in that because of the geopolitical play. Okay.
Okay.
Yeah.
Thank you.
Good. Welcome. So any other question?
Okay, Evangelist, hold on. Please, guys,
Okay.
let us ask our questions. This room is open for free. Let's come in and ask our question. Not minding what the question is, you will surely get clarity. The Godo is offering this service just to make sure there's clarity among traders. Please, if you have any questions, feel free to ask your questions. Thank you, guys.
So please, what's your thought on the BTC USD?
Oh, for BTC, I anticipate crypto. It's not a signal I'm giving, but I anticipate Bitcoin to fall soon because after this correction, I was looking at was expecting okay price to push up small, and that is exactly what the market is doing. So for BTC, I expect price to fall down at least down to up to 45 to 40K levels. When you look at BTC on the 4 hours, this is what I can see, my opinion. Here price has given me an impulse, the first corrective structure impulse. Anytime this is done, BTC is expected to fall. That is my own opinion. So once this is done, I don't think it's an opportunity to buy BTC. Once this is done, push the downside. And during time of uncertainty like this, crypto is a risky asset. Investors usually ditch crypto. You know, um, uh, because it's risky. But aside from that, we could be seeing some kind of defiance from, Bitcoin and crypto, because during these times, you see that one of the targets US has been targeting is the, banker, banks being used to pay some of the military operatives in Iran. And when something happens, you see them begin to make moves using BTC, maybe to pay their forces and all of that. And in terms of buying arms and all of that, when you try to disarm them, your opponents or your enemies, economically, for them not to be able to move money and buy weapons, sometimes they move into the crypto market, which you don't have control of. All right. So I think that could maybe make BTC maybe to keep on crawling to the upside a bit. But on the long term, I expect to push that down to 45, 40K levels.
Okay.
Yeah. So that is aside, token economic factors that could affect price. That's the major thing, I think. Okay, Bada Gabriel, you raised your hand. Okay, go on with your questions, please.
Yeah. This trading view, because the one I have on my system is not showing like this, not even showing all the sector. How do I have this kind of system set up on my system?
Trading view. Sorry, I didn't get what you mean. Okay, okay. This no, I'm the one that
Yes.
did this myself. I arranged it myself. So you're going to do it yourself. I arranged it myself. Probably, I think you can only do this with a paid version.
Which version?
A paid version. But I arranged it myself.
Okay. 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 I have to subscribe before I can have all this full analysis.
Not to the full like this MACD you are seeing here. You don't need a paid version for it. But in terms of if you are talking about arranging financial instrument this way, I think you will need a paid version for that. And also to put, a whole lot of, instruments, because the free one is limited, to certain things. It's only when you are trying things out, and it will now definitely tell you, okay, no, you need a paid version for so service.
Okay.
Yeah,
Okay. Thank you, sir.
you're welcome. So any other question, or we are done for the day? Okay. In the absence of no questions, so guys, like I said, we are having a whole lot of geopolitical events going on, and will continue to go on. And also in terms of monetary policy actions, a lot of interest rates, from central banks. So it's good for you to trade carefully, manage your risk, don't just jump in, come into the market like a sniper, not a machine gunner. And I wish everybody, a peaceful week. Okay.
Thank you, sir.
Yeah, thank you. So
That's
thank you very
very fun.
much. Yeah, thank you very much, everyone, and enjoy the rest of your weekend.